Hey, 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 everybody. How are you all doing? Welcome back to another edition of the Real Deal Pod with Allister and Geoff. This is episode number 28, and it is a special Friday episode. I appreciate all of you guys. Geoff appreciates all of you guys waiting on us to be able to deliver it a little bit late this week. I am the reason why the podcast is a few days late or a day late coming out. We'll get into that in a second, but I just wanted to say that, yep, happy to be back. It's a beautiful sunny Friday. My God, it's beautiful out there. When I flew back into Vancouver here from Calgary, it was raining and gross. And it had just started raining and gross in Calgary. It was a beautiful time this week. I'll talk to you about that in a few minutes. My man, Geoff, how are you doing? Did you miss me? Are you happy I'm back? What's going on, man? What's new?
You know what? I've been thinking about you every day since last Wednesday. So
Thanks,
yes,
buddy.
I have missed you. Things are going well. Just coming off of a 210 kilometer gravel bike ride
That's
over
right.
on the island.
How'd it go?
It went good. It went good. Like my backside is starting to feel a little bit more normal. But besides that, it's pretty cool when you are just kind of doing 200 kilometers on gravel roads through Vancouver Island and just getting in that back country and just doing overnight camping and all you got is you, your bike and your buddy. So it was
That's
good. It was
that's
good.
awesome, man.
I always ask people this when they do things. Would you do it again?
I was gonna say that. I was gonna ask you, would you?
My answer to that, yes, I would do that again.
That's wicked.
Yeah. Yeah, it's
That's
the second big one that we've done. The year before we did the KVR trails.
okay.
That one was about 260 or 325 kilometers. We did that in about 2.5 days as well. But each year we are doing a major gravel bike ride. So to our listeners, if you want to have a one-on-one and you like gravel bike riding, hit me up. We
That's
could do this all day long.
That's awesome. I won't be joining you, but I'll listen to all the stories. You just bring back the stories. I'll sit, I'll listen, I'll enjoy, and I'll just visually mentalize myself being there. I'll put myself there.
Never say never, Alistair. You got to go through a midlife crisis to kind of get there. So you're too young for that.
That's right. I know because I'm 47, so and that's the new 30s, right? That's what I
Yeah.
hear. Yeah,
Yeah.
perfect. I'm still years away from that. I'm still years away from the midlife
The
crisis.
40s are the new 30s, I think. Right.
Exactly.
So I actually, it's, not to get too far off topic, but I'm in the process of getting whole life insurance or thinking about it.
All right.
And they actually, that's another good podcast that we should do. But that's another day. But they give you an illustration as far as how long you're going to live based on the activity you do
Wow.
currently, if you can sustain it.
Hmm.
Geoff Lee is going to live to the ripe old age of 93.
That's awesome, buddy. Congratulations. That's good work, man. That's good work.
Uh,
Way to keep taking care of that body, buddy. That's fantastic. It's a
I don't
temple,
know.
man.
I don't know. I don't know if I want to live till 93. Have you
Come
seen?
on now.
I've seen some elderly people. Hey, I don't know. I don't
Man,
know.
I can know, man. I would actually, my wife Michelle, she sent me, what was it, last week before? She sent me an article of this a 91-year-old man that was learning how to surf. That was his deal.
Really?
Yeah, he was learning how to surf at 91.
That's awesome.
So that's
Yeah.
what I'm saying, man. It's all in the heart, it's all in the head that determines how old you are, man. If you got it in the heart, if you've got it in the head, you can do it.
The other thing that they say as well is your community
Yep.
and the people you surround yourself with.
100% keep you
Right.
keep you young and going. Exactly. Exactly. Well, myself, my man, again, like I was saying, I'm the reason why this is late. Have spent the last week in Calgary at the Royal LePage National Conference. Oh man, it was amazing. I've got to say, yeah, this was one of the best, one of the best things I've ever attended. The
Nice.
insights into the innovations, man, it is unbelievable what they're coming up with. And I was talking with a colleague of mine, and Sorry, I'm going to turn that phone off from ringing. I was talking with a colleague of mine while we were there, and I was just kind of speaking of my differences, being with the other brand, right? With the balloon versus where I am now, right? And it's really funny actually. The biggest thing that I took note of, well, I took note of many big things, but one of the biggest things I took note of was actually where the money's going. So from a realtor perspective, from a brokerage owner perspective, right? We pay fees to these brands, right? We give these brands the money to be able to put their label on us, right?
Yeah.
And when I see that my money, when I was with the other people that are very good, right? That money seemingly went to going and paying some star that was going to appear on a commercial that really wasn't going to help my clients or myself at all. Sitting in this conference for this past week and seeing where this money is going to, it's not going to paying people to make commercials or anything like that. It is literally going to infrastructure to take back to the clients outside. So not just to help us internally as realtors, but to literally take out and push to the client to use for free, right? To use not with us. And I just think that is legitimately what drives Royal LePage and keeps Royal LePage as Canada's number one brand. And it's not a joke. That is legitimately the reason why. So that was one of the insights we got to speak. I know got to speak hear great speakers. Richard Robbins, as always, is an amazing person to listen to. He was cooking. The fire alarms went off. He was cooking, man. He was so hot, no joke. He was cooking so hot, the fire alarms went off. Then they told us we might have to evacuate. So the whole place starts to evacuate. We were in BMO Center, which is where the Calgary Frames will start playing now instead of
Oh,
the
they literally went off.
yeah, they literally went off and they started evacuating us down. And just as we had gotten about a quarter of the way down, they said, never mind, go back up. So they had to turn the whole crowd of us back up into the thing. It was hilarious, man. He was hot. So that was great. For people that out there that don't know, we have the Royal LePage Shelter Foundation, which is a foundation for abused and battered women. Such an amazing foundation. We were able to raise so much money. The full fur coat was the hit. It raised $18,000.
What was it?
A full fur coat.
Okay.
So what it is it's a fur coat that the highest donator gets it for the year and basically markets it on social media that they donated X amount of money to the shelter foundation and now they get to wear it around for a year and they get their name embroidered in on the inside and then they promote that on social media and then at the end of the year hand it back and the donation's done again for it. So $18,000 was raised just for that full fur coat. Amazing. I thought that
What
was
was the full fur? What was it?
what's that?
What was it? Like a full fur, what kind of full fur was it? Like a
Yeah, it's like
mink?
one of those mink coats, you know what I
Oh,
mean? Like
okay,
one
yeah.
of those, 80s, remember those mink coats that those ladies used to wear in the 80s?
Yeah, yeah.
Yeah, one of those suckers. Amazingly tacky and beautiful. I loved it, man. I loved it. Yeah, so that was crazy. Our fearless leader, Phil Soper, I'll get into him in a second. Him and the RLP band killed it. He was out there on guitar singing. They killed it, man. So it was awesome. And then we capped it off with just an amazing awards gala celebrating all the hard work and success that everybody puts forth. Man, it was ridiculous. So big things are coming, people. It was awesome.
Yeah. What were the three big takeaways or some good takeaways that you got over this
Well, one, I'm
conference?
going to give you the big one. It's the discussion that Phil had with us. That's probably the biggest one for me, and I know it's going to be the biggest one for our people listening. Um, Biggest one, selfishly for me, was a few people that I got to meet. So I know that Simone, I'm gonna apologize right now. I'm gonna get your name wrong, but your last name spelled said wrong because I did it all conference. But Simone Papa Ilias, Simone Papa Ilias. He's the co-founders or founder and CEO of REC Canada. He's part of the Royal LePage brand out there in Toronto. Guess he gave me a great a great pep talk and just some advice and really kind of solidified in my mind and in my being that I do my business the right way, right? When we talk about realtors and stuff like that, good ones, bad ones, this guy is not good. It's not great. I don't know if there's a level above that or greater than that, but he just an amazing realtor. Then there was also Stefanos Papadopoulos. He's a broker in Toronto. He was an amazingly nice guy. He wore a jersey for every single for every single event. He had a different jersey on. That was his brokerage's team's deal. They were amazing. And then the entire Royal LePage benchmark crew in Calgary got to meet a whole bunch of them. So many bright and intelligent people. Like it was overwhelming the amount. So that's why you start losing names, but just the overwhelming amount of people that were just there to share knowledge and just laugh, and it was great. It was great. I'm still so humbled and grateful for being able to go. But the biggest thing, man, I want to dive into was Phil. So just so everybody knows, Phil Soper, if you Google him, he is the CEO of Bridgemark Real Estate Services, which owns Royal LePage, Johnston and Daniel, Via Capital, and Proprio Direct. So Phil isn't just any leader. He was recognized as Inman's 2024 Power Players list as the most influential executives in North America real estate industry. So people, this is why when you actually read Bloomberg or financial this, financial that, there's only one voice really that you hear talking, and it's Phil Soper. And the reason being is Royal LePage being a Canadian brokerage, we are directly tied into Canadian real estate. So that is why anybody and everybody refers to Phil when they are asking for an outlook on on Canada's real estate as a whole. So it was crazy, his discussion. So I'm going to read out a little bit of my key points. So during his talk, Phil discussed the latest numbers from the Canadian Real Estate Association, CREA. And so let's just say the housing market, as he was saying, was doing like the Macarena. So as a whole, even though we saw a drop off, right? We know in Vancouver, we saw a drop off. We saw a drop off in Ontario. When I was talking to the benchmark crew in Calgary, they were actually hot all this year. They are now actually sliding back now into a balanced market. So just, again, it just sort of showed how Canada was different, but the same, right? One step forward, two steps back, right? Um, August saw home sales drop from 2.1% compared to last year, but they rose from 1.3% from July, so stuck in a neutral. Phil pointed out, this is the big things. Phil pointed out that many buyers, especially first-time buyers, are hanging back like they're waiting for a date to text back. That was the funniest comment I ever heard, man. He said, first-time buyers are waiting like they're waiting for a date to text them back.
That's a good
So I
one.
thought that was a great analogy and a great way to put it. But it's because they're being rational, which is obviously a nice way of saying that they're cautious. So typically, first-time buyers make up 40% of transactions in a post-correction period. 40% of transactions. But right now, where was it at? But right now they're observing the market like it's a reality show, lots of drama, and not sure if they want to jump in yet. Right. So like we're still seeing that whole same thing that we're seeing in BC. We're seeing it across the board throughout Canada.
Right.
But this is where it gets heavy. So he noted that while the central bank cuts or central bank rate cuts have been making monthly costs a little bit lighter, the first time buyers are still playing the waiting game. However, he highlighted that things are likely to change in the spring of 2025 based on three factors. So here they are, people. One, borrowing costs, of course, are likely to get lower, and we'll probably see at least 50 basis points, maybe 75% by that time, right? So 50 to 75 basis points by spring. And that'll have moved things down a full percentage point and a half. Number two, an influx of new Canadians will now lead up to pent-up demand. So because we'll have that influx of Canadians and we don't have the supply ready for it, it's going to lead to an influx of demand. And then of course, we're going to have the seasonality trend on top of that. So as he said, now the trajectory of home prices and appreciation, it may get uncomfortably high really quick. So that was the key thing that I took away is that
Well,
all of these building factors, right, that we're not thinking about, right? The rate cuts going down, yes, they're going down gradually, right? But we're not thinking come spring, which is the actual busy market, what that rate cut is going to look like in total, right? It's just an ease like easing the frog. Have you ever heard the analogy, right? If you throw a frog into boiling water, it's going to die, right? But if you immerse it in before you can gently raise the temperature to it be boiling and it will survive,
oh,
right?
wow.
Because it's been eased in. Yeah, so that's exactly what's happening. We're getting eased into the boiling water, not realizing what's about to happen. And then come springtime, the water's boiling and we didn't realize, and we're going to have two sets of people come into the market and fighting at the same time. So we're going to have the first time buyers that made up that 40%, but we're also going to have the investors now jumping back in because the rates have dropped,
Interesting.
right? So now that's where it's going to get uncomfortably high really, really quick because we're going to have that battle of those two people again.
Right.
So that was the biggest takeaway for all of you out there, right? And for just really for everybody is that these bank cuts are amazing and they're great and everybody's watching and everybody's paying attention, but nobody's ready to act because again, they're like, okay, let's wait again, let's wait again, let's wait again. But it's like boiling water, right? It's the same thing that happened pandemic wise. And it's not saying that we're going back into pandemic times, right? But what it's saying is that rate cuts kept coming. And then all of a sudden, out of nowhere, home prices were skyrocketing and everybody was caught going, holy bro, what happened here? Right? The water boiled around us before, right? We just didn't see it coming. Right. So that's I think the biggest takeaway is we got to pay attention going into spring is if we're thinking about doing things, we gotta be very, very strategic in what our plans look like because it can
So
get
what I'm hearing from you
uncomfortable really quick.
is that spring of 2025 is going to be very, very busy.
Yeah,
The market is probably at that point going to flip very quickly to a seller's market versus a buyer's market.
you betcha.
And the best time to buy is now before that craziness gets out of hand and could
Before you don't see
reflect.
it coming. Before you don't see it coming, right? That's
Right,
really it. Is before you don't see it coming. Like
right.
that's the thing. Don't wait. Don't time yourself out like for real, because this is again from the gentleman that the Canada gets its real estate information from. This isn't a real estate agent saying, it's not a mortgage broker saying it. This is a legitimate.
And I think it's important to understand as well, and we just went through this in our COVID years,
Yeah,
where once it becomes a seller's market, and once you get into that eye of the hurricane of pandemonia,
yeah,
there's a lot of silly things as a buyer that can happen to you. Overpaying,
yeah,
subject-free offers.
right.
Um, and again, if you are in the market, and this is kind of what I'm hearing from you, if you are in the market and you're trying to time the perfect time, and most people will think, well, that could be spring because spring is always the best time to buy. Actually, that timing is now.
Yeah, that's what I'm saying. It's not spring. If you wait until spring, you're done. You're out. It's out. And I'm going to say I will. I had again the pleasure of being able to talk this to Phil. He is far and away more intelligent than I am. It's not even close, right? So I will heed the advice of somebody that has more expertise, even more understanding of the market than I do, right? And so I will always heed that advice than somebody that doesn't have those credentials but says, "Hey, I bought a house one time a long time ago where I timed it." Right? Like some people get lucky once. And in fact, that's how people get addicted to gambling is the first time they gamble, they win big. And then they spend the rest of that time trying to chase back that winning, and they never hit that height again. It's actually the if you actually study the gambling addiction, that's how gambling addiction starts. So that same theology, you take the advice of experts, right? Like, right. And so, yeah, so an amazing conference, Geoff. Like it really was such great insights. The messaging that's going to go forth with, I don't want my clients to get stuck in that storm, right? I really, really don't. So it'll be, let's sit down and talk about your plan. If your plan is to wait till spring, I am there to support you then too. Right. It's not, but I just want to make sure that whatever plan that we have is a solid plan, right? And that will be my messaging. That will be my my drum through the next 3 months, actually.
Well, that's a good drum to beat.
I think so.
So,
I think
so
so. What do you got for
yeah.
us though, Geoff? What do you got for us today?
Well, what I wanted to talk about is the Bank of Canada rates
Well, there we
and
go.
and how they've been being cut, and just to kind of give an understanding as far as what is going on and what is foreseen. And as you just alluded to or stated that rates are coming down.
Hmm.
We're expecting to see our overnight lending rate come down, and we're going to jump into this by the end of this calendar year and further in 2025.
Yeah.
And as you were saying, this is kind of triggering what might be happening come spring of 2025, is because everybody is on the fence waiting. And then as things are waiting and as things are coming out and as people are feeling better about what they're doing, it's crazy. It just takes that one to start, and then everybody follows thereafter. And before you know it, to your point, you're in a huge avalanche. So you want to get before that, have a good understanding where the rates are going. Because again, when we're talking about the overnight lending rate and the prime rate, we're really talking about variable rates. And if you are in a variable rate and or you choose to do a variable rate, you don't need to wait for these upcoming announcements to get benefit from them. You just need to strategically understand on how they work and what that rate may look like in the near future.
Right. And sorry, Geoff, not to, I was going to tag on to something because it's something that makes me laugh sometimes. And my investor clients just don't listen, like listen to me when I say this. I love you guys. Keep jumping in first, keep being the first people to market, keep realizing it's time to buy before everybody else does. Because I am the one that helps you guys. But when I speak to first time buyers. And I'm like, guys, you need to be following the investors right now because they know when to buy. See, I've got a whole bunch of people that are buying right now. You may want to do this too because they realize that it is going to get super expensive later on, and they don't feel like paying later on prices later on. They want to pay the nice prices right now, right? And so that is the thing. It drives me nuts sometimes when people don't actually pay attention to affordability, really like don't pay attention to affordability, and they do pay attention to rate, right? Because if they right now, in all honesty, by paying attention to rate, you are costing yourself an enormous amount of money. If of equity, I will say, if you would focus on affordability, you are going to make yourself
Yeah.
so much more money down the road. Sorry,
Yeah.
go on, Geoff. It's just I wanted to tag on that piece with waiting for people to jump in.
Well, I'm also very interested to this gentleman's comment where he feels that there is going to be a large influx of investors coming. And I'm curious, with all these new rules and regulations coming out with the flippers tax and capital gains and all these tax implications, I, I'm curious to pick his brain as far as how that's going to impact the investment side of things. Because to
Well, for
me,
Phil, he looks at it from a broader scope, right? So he's looking the flippers tax, the flippers tax is federal. That is true. So it'll be interesting to see, yes, how that affects the market as a whole. That is true. I was just thinking some of the stuff that we've done here in British Columbia
but
on
it
our
could all could also again be referencing long-term investors as well,
sure. Yeah,
right?
yeah.
So yeah, again, to have 15 minutes with this gentleman probably would be mind-blowing. So it's good on you for that.
Yeah.
But let's talk about the Bank of Canada and
Yeah.
its rate cuts.
Yeah. Let's
I
go.
know you're excited about this, Alistair,
It's
as
no, it's a great thing. Like the rate cuts are definitely needed. We have to get it down to 3%, right? That's what we have to get it down to. So it's highly, highly important. I just don't want people to wait for 3%. Because if you wait for 3%, you're waited too long. You're now paying more money than you can afford. So that's why I want to talk about this. So go on.
well, again, just really touching on this at a entry level for understanding, because I think that's the most important thing, is not to get too deep into this, because this pod could go on for 5 hours and
Yeah,
probably put everybody to sleep.
exactly.
I feel that our goal here is to touch on these, get some education on it, get some golden nuggets out of it, and then dig a little bit deeper in that, either on your own or connecting with us to discuss it a little bit deeper. But here's the thing: the Bank of Canada, we know that it meets up to 11 times in a year,
Yeah,
right? We also understand that the last three Bank of Canada meetings, we have seen our overnight lending rate being dropped a quarter of a point each and every time. And again, which is very uncommon considering that it got raised 8 times in a matter of 11 months.
right.
So when the Bank of Canada meets, and we'll just talk about its last meeting, when it dropped the overnight lending rate of a quarter of a point, people often think that the overnight lending rate is the same as the prime rate, which is not, right? It's very important to understand, like as of today, our overnight lending rate is 4.25%. Our
Yep.
prime rate is 6.45%.
Yeah.
So if you are in a variable rate mortgage and it's prime less, say 1 point,
Yeah.
a lot of people are coming to us and say, prime rate is now down to 4.25%. Less the discount of
That's the one.
1%. I'm paying 3.25%. And unfortunately, at that point, I got to reel them back into reality and say, you know what, that's the overnight lending rate.
Right.
Prime rate is actually 6.45%, less your rate is really right at 5.45%. And guess what question I always get after we reel them back in, Alistair?
What's
Well,
the
what
difference?
what's the difference?
What's the difference?
And it's a great question. So here's the thing. Here's one of those golden nuggets that you need to walk away with. Number one, understand that your variable rate is dictated by the prime rate, not the overnight lending rate.
Yeah.
Super duper important. Super duper important for everyone to understand because the rates are different. Now,
Mm-hmm.
your overnight lending rate is the interest rate that banks lend or borrow funds from other depository institutions, fancy word banks, in the overnight market. In short, it's a form trading of short-term funds,
Yeah.
right?
Yep.
So if you're a bank and I'm a bank, I'm coming to you, Allister, you're lending me money with an overnight lending rate. Now, the prime rate is the interest rate that the banks use as a basis to set rates for different types of loans, such as credit cards, lines of credit, and variable rate mortgages. So there's a rate, overnight lending rate, where financial institutions will borrow that money from other financial institutions. And then the prime rate is using that money to lend that money out. And they're putting a bump on it,
On it. Yeah. Yeah.
right? So that is very, very important to understand that there is a difference between an overnight lending rate and what that is when it comes to your prime rate, which is dictated by your variable rate mortgage holders. So again, the good news with that is the last three Bank of Canada meetings, we have seen our prime rate drop a quarter of a point. It currently sits at 6.45%. Our next Bank of Canada meeting is October 23rd, one day after my birthday.
Go.
And it's expected that it's going to drop another quarter of a point, with some economists and analysts feeling that it's going to drop a half a point.
Yeah. I used to be
So
on a half a point bandwagon. I don't think I am anymore. I think I'm sliding off of that one. I think I'm going down to a quarter. I'm being conservative on that. I don't see it now. I don't see it
yeah,
now.
I would agree with you. And I always like to kind of be a little bit more conservative
Yeah.
than aggressive.
Yeah.
Just for the fact that when people are swinging that flag of 50 basis points, 50 basis points, a lot of times that's over promising and then you're under delivering,
Yeah.
right?
Yeah.
I always rather to say, hey, this is the expectation. This is the strong likelihood, 100% it's going to drop a quarter of a point. And if it drops more, even better,
We win.
right?
Yeah, exactly. Yeah. Yeah.
Right. So again, a lot of times people will also ask, well, why is our overnight lending rate dropping? Why is our prime rate dropping? And it's largely there's two things. Our inflation rate now is coming in line
Yeah.
to that 2% inflation percentage that Canadians need to have. So we are in that sandbox now. We're also in a recession, depending on who you ask.
Mhm.
And then the one thing to understand is that the only way to get out of a recession is to spend money.
Money. Yeah.
And how do you spend money? You lower interest rates so people can borrow that money to spend, and then basically away you go. And that's kind of an oxymoron because it's funny. Our inflation rate was so high because of overspending.
Yep.
That's why our prime rate and our overnight lending rates were rising and rising and rising
Yep.
and
Stop
rising
spending.
to slow it all down.
Yeah.
And now that it's slowed down, now they
Don't
want to
you?
speed it back up. So
We did it too much. We got to pedal the bike again. The bike's gonna stop. Start
yeah,
pedaling. Start pedaling.
yeah.
Yeah.
So it's just such a roller coaster ride, and I often just chuckle to myself as
Yeah.
far as on the landscape and how it differs. I think we're on podcast 28, but even if we roll back to
I don't go
podcasts like
down in the tape.
earlier,
Yeah.
like the song is being, what the messaging from our early podcast to the messaging as far as where it's at now is
Yeah.
much, much different,
Yeah. It is.
right?
Yeah. Yeah.
And that's also why I feel it's really important that you have yourself, and we call it the power team, that you do have a power team around you that does have the thumb on the pulse because it changes so fast,
That's exactly it. Yep.
right?
Yeah.
And if you don't have somebody that has their thumb on the pulse, you're getting misinformation,
Well, it
right?
is. And you're getting information that's always going to be late. And again, you're going to be timed out of a market, or you're going to be making decisions at a time you don't want to be having to make those decisions. because you could have made a better decision earlier, right?
Exactly.
Yeah,
Exactly.
yeah,
And here's the thing too, is coming back down to affordability, and we are seeing our variable rates drop. So we are now seeing a large amount of people starting to talk about variable rates again.
yeah.
We are starting to see a lot of people that didn't change their variable rate into a fixed, that still hold a variable rate, that there is a lot of mortgage relief that has been
They're
coming
feeling
their
the ease
way,
now. Exactly,
right?
feeling the ease now. Yeah.
That being said, they had a lot of more variable rate stress
Well,
for
it's
the
hard.
last year and a
It's
half.
hard. It's hard.
But again, we only remember what we've done yesterday versus what we've done a year ago. So
You're,
again, our human nature is like, hey, we just took a beating for well over a year and a half.
yeah,
Now, for the last three Bank of Canada meetings, soon to be four, we're starting to see some relief. And this is why Canadians are feeling a little bit more relaxed
yes.
about what is going on with the variable rate and the prime rate. And to your point, as they become a little bit more comfortable, they're going to be a little bit more comfortable coming back into the market.
Easing back in. Yep.
And again, we all work a little bit slower than most. This is again where we have those discussions as far as what that spring of 2025 is going to look like.
And
And back to your point is to, if you are in that process of home buying or even home thinking,
yeah,
now is the time to jump in because you could really save yourself a lot of money in equity position,
yeah,
right?
yeah.
And again, if we're talking variable rate mortgages, keep in mind, folks, is that if you get a variable rate mortgage today and your prime rate is 6.45, less 1% of that, and the prime rate drops as it's expected to do, you're going to be benefiting from that anyways. So why would you wait if you're waiting for the rate?
Yeah. Well, that's it, right? And that's what I mean. I was just going to say, and I don't mean to interrupt, but the path, like the road ahead, sort of been set. It's already
Yeah.
been established that we are going to continue for the balance of this year. We are going to continue to see slow sales throughout real estate, right? We've seen it already, right? We've seen it through the past June, July, August, now, into September. We're going to still see it throughout the rest of the year. And then it's going to creep up out of nowhere once we hit into the January, February, go into March, and then April, May, and then all of a sudden it's going to go. So, and that's what I mean. The story is written, right? So to not follow the story and make sure that you're not getting caught at the arc at the arch of it, right? Is it's beyond me.
And I think that's also very important that you're surrounding yourself with professionals that do have that thumb on the pulse,
Yeah,
where they can navigate you to the right place at the right time. You know,
exactly.
I always say, hey, we're always a 1 degree of separation. And the thing is if you're off course by 1 degree, you know, you're heading to
An
Australia, you're
iceberg
going to be ending in Japan because of a 1 degree
or hitting an iceberg.
separation. So again, if you have the right captain at your ship and you are a good first mate and you trust that captain, you're going to get where you need to be a lot quicker. And at the end of the day, probably, and in doing so, putting a lot of money back into your pocket, right?
Yeah, yeah,
So again, you know, what I'm saying, and just to recap this a little bit, with a lot of the rate announcements that have been coming out, we are seeing a lot of people getting a lot more comfortable with moving forward in their purchases. And that's especially with first-time home buyers as well. We take a look at all the new things that are happening for first-time home buyers. With the rollout of 30-year amortizations come December, that is going to increase purchase power for first-time home buyers. That is also going to increase affordability of monthly payments for first-time home buyers. So again, a lot of these announcements and a lot of these news that are going to come, first-time home buyers are going to benefit, right? If they're in the right place at the right time. So again, just to kind of wrap it up and just to kind of get into it, we are going to see another Bank of Canada meeting October 23rd, another one December 11th. My prediction is we're going to see our prime rate drop at least another 50 basis points, which will bring our prime rate down to 5.95%. Again, remember when you have a variable rate mortgage, it's your prime rate less the discount that that lender is getting you. So we could possibly be seeing variable rates as low as 4.8% by the end of this calendar year. And then again, we are expected to see the Bank of Canada to continue their rate drops going into 2025, with a lot of economists and analysts believing that our prime rate is going to drop an additional 2% in the course of that 12 months. So again, back to your point, is it's going to be a busy spring.
We're in for some interesting times, my man. We're in for some interesting times.
Yeah. So my 30-second wrap is to understand that the Bank of Canada meets 11 times a year to discuss the overnight lending rate, which is different from the prime rate. Your overnight lending rate is the interest rate which the banks borrow funds from other depository institutions in the overnight market. Then they take that and then they basically use that money to basically lend out in different types of loans, such as variable rate mortgages. We are seeing our variable rate and our overnight lending rate drop 3 times in the last 3 Bank of Canada meetings. We are going to see it drop in October's meeting. We are going to see it drop in December's meeting. I'm going to put my money on it, guaranteed a quarter of a point each meeting, which is a total of a half a point or a half a percentage point by the end of this calendar year. Again, the Bank of Canada in 2025 will meet 11 more times, and the expectation is that our overnight lending rate is going to continue to drop, which has a collateral effect onto our prime rate. And again, we could easily see our prime rate dropping another 2% here in 2025. Nobody has that crystal ball. Things change all the time. And I just go back to our podcast from day one, podcast 1 to podcast 28. It changes all the time.
All the time. All the time.
What this means with all these rate cuts on the overnight lending rate and the prime rate is a relief for variable rate mortgage holders and the discussion of variable rate mortgages when people are coming down for a purchase. First-time home buyers are getting blessed with a lot of new guidelines and regulations that our government is inputting. What that means for them is that they're focusing on affordability. They're focusing on down payment. They're focusing on turning affordability as far as purchase prices going. So again, I think we're going to see a surge of first-time home buyers.
They make up as I said, they make up 40% of transactions and they are coming back to the market. That was going to be part of my key takeaways. Right. 40% of transactions, they're coming back to the market. The other ones that are coming back to the market are investors. So those two people coming back to the market now are going to drive sales quick or drive home prices quickly.
Exactly. And from what I'm hearing on your side is that now is the time to buy. And if you're not buying today, the likelihood of you buying in the next 9 months is highly likely.
Yep.
But again, you then might be in an environment where
might be fighting.
Now it's a seller's market and you could be possibly overpaying and not necessarily putting equity in your pocket as if you were to pull the trigger today.
Here's a suggestion I could give to everybody. If any of you know a friend, a family member, somebody that purchased during the pandemic, talk to them about their experience and say, if you had the chance to do it when the market was calm and you could take your time and look and then put an offer and know that there was a better than average chance that nobody else was going to put in an offer competing to yours, what would you do? I'm going to pretty much guarantee universally that those people will tell you they would rather buy a home in this type of an environment than getting caught waiting like COVID happened.
Yeah, the problem though, Allister, as we know, is that people just follow the person that's in front of them, right?
Unfortunately, as I learned from somebody a long time ago. Learn from the mistakes of others. That's success is learning from the success of others. Failure is learning from yours.
Yeah. It's
That
also
like
called
if
it's also
somebody
called
knows, if somebody's told you what the road is and you decide to not follow it, why would you not do that? That's failure. That's your fault.
I think they call that wisdom.
That I think so too. I believe that too. And I believe in wisdom. I believe on, hey, if that dude told me that's the right thing to do, I'm in. But yeah, amazing, my man. Well, oh, you know what? Quick thing, just before we let you go, I'm a little. So I told you the innovations that Royal LePage is coming out with for the people out there. This is how crazy they are about helping people without realtors. They are, if you remember Zillow, right? Everyone, people remember Zestimates, right? Where you could just pop on Zillow and you could find out what your home value is. They have in the United States. Royal LePage will be the only brand in Canada, the only website that you can go to you will be able to pop onto their website and find how much an estimate of what your home is worth without having to call a realtor for CMA.
Interesting.
I think, you know what? In all honesty, I think it's fantastic because then it really does allow me to focus with my clients really on what the journey and how achieving their goal it will look rather than, having to even guide through pricing and stuff like that. They'll have a better comfort that they know what I'm talking about when it comes to pricing as well. So I think it's an amazing innovation. We're going to be the only website, we're the only brand that will be able to provide it. So that's what I mean. Royal LePage is literally the brand for Canada. It's amazing. And that's not even a plug. That's just me being happy, and I'm a little pumped that I was there. I've still got that energy for coming, that conference energy, and I never really.
Did you get a Royal LePage tattoo when you were there?
Nope, 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 nope. But I almost bought a cowboy hat, but then I realized when I put it on, for you viewers that don't see me because this isn't on video, I've got a peanut head. It's skinny, right? So when I
It
put that
is.
cowboy
It
hat,
is.
when I put that cowboy hat on, you know those like big foam ones? That's what
Yeah.
it looked like, man. It was fantastic.
You got
So
to get a cowboy hat. Those are awesome.
yeah, man. All right, brother. Well, everybody, thank you so much again for listening. I'm so sorry to make you guys have to wait, but appreciate you waiting. Please continue to love us, like us, download us, share us, tell everybody you know about us. We always hope we are helping you. We are always hoping that we are providing information that is relevant to your needs and guiding you through your journey. Yeah, guys, thank you. We can't wait to be back here again on Wednesday for episode 29. I'm gonna make that one, I promise. Awesome, Geoff, my man. We'll talk to you later.
All right, y'all have a nice day.
Peace.